In my analysis of the cryptocurrency landscape, one project stands out as having the potential to lead us toward the mass adoption of digital assets, Stellar XLM. The value proposition of Stellar lies in its capacity to revolutionize peer-to-peer, P2P payments by offering an efficient, low-cost alternative to traditional systems. This is not just theoretical potential, it is a realistic, tangible shift that is already underway. When we talk about P2P payments, we're addressing a fundamental need for people across the globe, especially in regions where every dollar matters. In many parts of the world, sending money across borders through traditional systems, like Western Union, comes with excessive fees, sometimes absorbing a significant portion of the funds meant for loved ones or essential payments. Imagine someone working abroad, sending money home to family. The fees incurred through established systems are more than just a minor inconvenience. They can deeply affect the recipient's financial well-being. The difference between receiving 95% or 85% of the original amount sent is often the difference between paying rent or putting food on the table. Stellar's solution is designed to tackle this problem directly. By leveraging blockchain technology, Stellar eliminates the need for intermediary financial institutions that traditionally inflate the cost of transferring funds across borders. Instead of waiting days for transactions to settle and watching as fees chip away at the original amount sent, Stellar provides a network where payments are nearly instantaneous and fees are negligible. At its core, Stellar is built to facilitate payments between individuals without the friction of current financial infrastructure. What makes this possible is Stellar's consensus protocol, a decentralized method of confirming transactions that doesn't rely on energy-intensive proof-of-work mechanisms like Bitcoin, nor does it require the centralized control of major banks. This creates a unique environment where transactions can be processed securely, quickly, and cheaply, perfect for the kind of micro-payments that are essential to the global P2P market. One of the strongest arguments for Stellar's potential lies in its focus on usability. The barrier to mass adoption is not just about providing better technology, it's also about making that technology accessible and easy to use for the average person. This is where Stellar is making strides. If cryptocurrency is going to be widely adopted, the user interface, UI, must be seamless and intuitive, allowing anyone, regardless of technical knowledge, to engage with the platform. Stellar's design addresses this challenge head-on by enabling developers to build user-friendly applications that integrate easily with its network. Mass adoption of cryptocurrency, particularly for P2P payments, hinges on creating systems that are not only more cost-effective, but also easier to use than their traditional counterparts. Stellar's network is designed to do exactly that, offering tools for developers to create wallets, apps, and payment solutions that anyone can use without needing deep knowledge of blockchain or digital assets. The result is a system where sending money across the world could be as easy as sending a text message. However, it's not just the promise of cheaper and faster payments that positions Stellar for mass adoption. The project has also focused heavily on financial inclusion, an area that traditional financial institutions have long struggled to address. By making it possible to send and receive payments globally without the need for a bank account, Stellar opens up new opportunities for millions of unbanked and underbanked people worldwide. This capability is critical, especially in developing regions where access to financial services is limited. In summary, Stellar's P2P payment solution is not just a technological advancement, but a practical tool that can meet the real-world needs of people who rely on international remittances and microtransactions. It is this focus on solving a global problem, combined with its low fees, fast transaction times, and user-friendly interfaces, that positions Stellar as a project capable of leading the charge toward mass adoption. The financial system is evolving, and Stellar is one of the few projects pushing this evolution forward in a way that benefits everyday users. In examining the broader landscape of digital payments, it becomes clear that Stellar, XLM, and Ripple, XRP, are often discussed in the same breath, particularly when it comes to cross-border payments. However, while these two projects may seem like competitors at first glance, they are in fact highly complementary, each serving distinct but equally vital roles in the evolving world of cryptocurrency and blockchain technology. Understanding these roles and how they complement one another is key to appreciating the full potential of both platforms. Stellar and Ripple share a common goal: to disrupt the existing financial infrastructure and improve the speed, cost, and efficiency of global payments. But they approach this goal from different angles. Ripple, with its XRP token, has carved out a niche in the business-to-business B2B payments market. It is designed to facilitate large-scale transactions between banks, financial institutions, and corporations, focusing on providing liquidity and reducing the friction that occurs when businesses send large sums of money across borders. In contrast, Stellar's primary strength lies in peer-to-peer, P2P payments, particularly in smaller, everyday transactions between individuals. Stellar's network was built to provide a more inclusive solution that addresses the needs of consumers rather than businesses, offering a system where people can send and receive payments quickly and cheaply, even across international borders. This makes Stellar especially relevant for remittances and other forms of direct personal payments, where lower fees and faster processing times are essential. By focusing on these two distinct segments of the market, P2P for Stellar and B2B for Ripple, the two networks complement each other rather than compete directly. Ripple's infrastructure is built around partnerships with major financial institutions, and it excels in providing liquidity for high-value transactions. Its consensus algorithm and design focus on enabling financial institutions to move large amounts of capital with minimal friction, ensuring faster settlement times than traditional banking systems. Stellar, on the other hand, is aimed at the end user. Its architecture is built around the idea that sending a small amount of money across borders should be as simple and inexpensive as sending a text message. The consensus mechanism used by Stellar ensures low transaction fees, which is particularly useful for smaller payments where high fees would otherwise eat into the value being transferred. This makes it an ideal solution for remittances, micropayments, and other personal financial transactions where efficiency and cost savings are critical. What's interesting about these two platforms is how they can work together in an evolving financial ecosystem. As businesses and individuals increasingly look for faster, cheaper ways to transfer money internationally, the combination of Ripple's B2B capabilities and Stellar's P2P strengths provides a holistic solution. Businesses can use Ripple's XRP to handle their large-scale cross-border payments, while individuals can use Stellar's XLM for their smaller, personal transactions. Together, these two platforms create a comprehensive framework that addresses the needs of both enterprises and consumers. In fact, as the demand for faster and more efficient cross-border payments continues to grow, the distinction between B2B and P2P payments may blur. there is already overlap in how both platforms can be used. While Ripple is primarily marketed for B2B transactions, its technology is also capable of handling smaller payments. Similarly, while Stellar is marketed for P2P, its network can support larger business transactions as well. This flexibility allows both networks to address a wide range of use cases, making them powerful tools in the global financial system. One of the key factors that sets both Ripple and Stellar apart from traditional banking systems is their focus on speed and efficiency. Traditional cross-border payments are slow and expensive, often taking several days to settle and incurring high fees at multiple stages of the transaction. Both Stellar and Ripple eliminate the need for intermediaries like correspondent banks, which not only speeds up the process, but also significantly reduces costs. By leveraging blockchain technology, both platforms can settle transactions in a matter of seconds rather than days and at a fraction of the cost. In this context, Stellar and Ripple are not just competing technologies, they are complementary solutions to a global problem. Together, they provide a full spectrum of financial services that cater to both businesses and consumers, enabling faster, cheaper, and more reliable payments across borders. This synergy between the two platforms is what makes them so valuable in the ongoing evolution of the global financial system. In summary, Stellar and Ripple, while often viewed as competitors, are actually two sides of the same coin. Ripple dominates the B2B space, while Stellar leads in P2P payments. Together, they form a powerful, complementary ecosystem that is poised to transform the way money moves across the world. As the financial landscape continues to evolve, both platforms will play crucial roles in shaping the future of cross-border payments. One of the most transformative aspects of Stellar's network is its focus on financial inclusion. While many blockchain projects are primarily concerned with technological advancements, Stellar's mission extends far beyond that. It aims to provide financial access to those who have traditionally been left behind by the global banking system. This ambition is realized through partnerships with organizations like MoneyGram, which help bridge the gap between traditional finance and the world of digital assets, particularly for underbanked and unbanked regions. To understand the importance of financial inclusion, it's essential to recognize the challenges faced by billions of people around the world who either lack access to basic banking services or are underserved by existing financial institutions. These individuals, often living in developing regions, rely heavily on cash and informal financial systems. For them, access to a bank account or digital financial services could mean the difference between being able to send and receive money efficiently or facing a lengthy, costly, and often unreliable process. Stellar's network is built with these individuals in mind. One of its key features is the global network of on-off ramps, which allows users to easily convert cash into digital assets and vice versa. These ramps are crucial because they provide a simple way for people to enter the digital economy without needing extensive technical knowledge or resources. For example, a user in a remote village could walk into a participating MoneyGram location, deposit physical cash, and convert it into a stable digital asset like USDC, a US dollar-backed stablecoin on the Stellar network. From there, they can send that digital asset to anyone in the world at minimal cost with near-instant settlement times. This system bypasses many of the barriers traditionally associated with cross-border payments. In the past, sending money from one country to another often involved high fees, long wait times, and multiple intermediaries. For someone sending money to support family members in another country, often a lifeline for essential needs like food, housing, and medical care, these inefficiencies can be devastating. Stella's network, by integrating with partners like MoneyGram, eliminates many of these pain points, offering a smoother, cheaper, and faster alternative. At the heart of Stella's commitment to financial inclusion is the idea that access to financial services should not be a privilege reserved for those in developed countries with access to banking infrastructure. Instead, it should be a fundamental right that extends to everyone, regardless of location or socio-economic status. By providing this access, Stella empowers people to participate in the global economy in ways that were previously impossible. The integration of stablecoins like USDC into Stella's ecosystem is particularly important in this regard. Stablecoins offer a way to hold and transfer value without the volatility often associated with cryptocurrencies like Bitcoin. For individuals in developing countries where local currencies can be unstable or subject to high inflation, stablecoins represent a safer and more reliable store of value. When combined with Stella's low transaction costs and fast processing times, this creates a financial tool that can truly improve the day-to-day lives of people in underbanked regions. But Stella's impact on financial inclusion goes beyond just the technical infrastructure. Its partnerships with organizations like MoneyGram have extended its reach to areas that are traditionally difficult to serve. MoneyGram, for instance, operates in over 400,000 locations worldwide, many of which are in regions where banking services are either limited or prohibitively expensive. By working with MoneyGram, Stella effectively taps into an existing, trusted network of financial service providers, allowing users to access the benefits of digital assets without needing to understand the intricacies of blockchain technology. This integration also supports a more seamless user experience. One of the biggest challenges in driving financial inclusion is the need to ensure that the technology is accessible to non-technical users. Many people in underbanked regions have limited access to education, let alone specialized knowledge of blockchain or cryptocurrency. Stella's system, by allowing users to interact with digital assets through familiar interfaces like MoneyGram, lowers the barrier to entry and helps people engage with the financial system in a way that is simple and intuitive. Moreover, financial inclusion is not just about providing access to payments. It's about creating a foundation for broader financial services. Once users have access to digital assets and a reliable network for transferring value, they can begin to access other financial tools such as savings, credit, and insurance. Stella's ecosystem is designed to be flexible, allowing developers to build a wide range of applications that can further enhance financial access and inclusion. This opens the door to a future where people in underbanked regions can enjoy the same financial opportunities as those in more developed parts of the world. In conclusion, Stella's focus on financial inclusion is one of its most significant contributions to the global financial system. By leveraging partnerships like MoneyGram and providing easy-to-use on-off ramps, Stella offers a practical solution for bringing the unbanked into the digital economy. Its ability to convert cash into digital assets, combined with its low fees and fast transaction times, positions Stella as a key player in the fight to democratize access to financial services. The result is a more inclusive, equitable financial system that has the potential to uplift communities around the world. Remittances, money transfers sent by individuals working abroad to support family and friends back home, have long been a crucial lifeline for millions of people around the world. In recent years, we've witnessed a profound shift in how these transfers are carried out. The traditional methods, which often involved in-person visits to wire transfer services like Western Union, are rapidly being replaced by digital solutions. This transition is reshaping the remittance industry, driven by a combination of factors including inflation, geopolitical instability, and the growing impact of global events. At the core of this transformation is the increasing reliance on digital money transfer services. Consumers are turning to these solutions in greater numbers for several reasons, but the most pressing is the sheer inefficiency of the traditional system. Historically, sending money across borders was a slow, cumbersome process that came with exorbitant fees. For example, if someone wanted to send $200 from the United States to a relative in a developing country, a significant portion of that money, sometimes as much as 10 to 15%, could be lost to fees, and the transfer could take several days to process. In a world where financial support is often urgent, these delays and costs are unacceptable. Digital remittance solutions, powered by blockchain technology, have begun to address these issues head-on. These platforms offer near-instantaneous transfers with minimal fees, which is a game-changer for those who depend on remittances. This shift is being accelerated by broader trends in the global economy. Inflation, for example, has put additional pressure on families in developing countries who rely on money sent from abroad to cover essential expenses like food, housing, and medical care. When every cent counts, the high fees of traditional remittance services become even more burdensome. Geopolitical issues also play a role in this trend. In regions affected by political instability or economic sanctions, access to banking services can be severely limited. In such environments, digital remittance solutions offer a lifeline, providing a secure and reliable way to send money across borders without relying on traditional financial institutions that may be subject to disruption or regulation. For example, in countries where sanctions have restricted access to international banking, digital assets like stablecoins can be used to bypass these barriers, ensuring that money gets to those who need it most. Additionally, global events like natural disasters or pandemics can further drive the need for fast, reliable remittance services. When disaster strikes, people often need immediate access to funds to deal with emergencies, whether it's rebuilding homes, paying medical bills, or securing food and water. In these moments, the delays and inefficiencies of traditional money transfer services are particularly glaring. Digital solutions, which can settle transactions in minutes, are far better suited to meet the urgent needs of those affected by such crises. The rise of digital remittances is also closely tied to the changing demographics of the global workforce. Younger generations, particularly millennials and Gen Z, are more comfortable with technology and more likely to adopt digital financial tools. This generational shift is reflected in the growing popularity of digital wallets and cryptocurrency-based remittance platforms. These younger consumers are driving the demand for more flexible and accessible financial services, pushing the industry toward greater innovation. Stellar, with its focus on cross-border payments, is uniquely positioned to capitalize on these trends. The platform's low fees, fast transaction times, and global reach make it an ideal solution for remittances, particularly in regions where traditional banking infrastructure is lacking or inefficient. By integrating with services like MoneyGram, Stellar has created a bridge between the old and new worlds of remittances. Users can easily convert cash into digital assets, send it across borders, and convert it back into local currency on the other end, all without the high fees and delays that have plagued the traditional system for decades. The data supporting this shift toward digital remittances is compelling. In a recent survey, 37% of consumers reported an increase in their use of digital money transfer services over the past year, a trend that is only expected to grow as digital solutions become more integrated into everyday life. This shift is not just about convenience. It's about meeting the changing needs of consumers in an increasingly interconnected world. As more people move abroad for work, the demand for faster, cheaper, and more flexible remittance services will continue to rise. Another key trend driving the adoption of digital remittances is the growing importance of mobile technology. In many developing countries, access to smartphones far outpaces access to traditional banking services. This makes mobile-based remittance solutions particularly appealing, as they allow users to send and receive money with just a few taps on their phone. Platforms like Stellar, which can be integrated into mobile apps, are well suited to meet this demand. By enabling users to send money directly from their smartphones, these platforms make remittances more accessible and more convenient than ever before. It's also worth noting the role of emerging technologies, such as blockchain and stablecoins, in shaping the future of remittances. Blockchain technology offers a transparent, secure, and decentralized way to transfer value across borders, while stablecoins provide a way to avoid the volatility often associated with cryptocurrencies. By using stablecoins like USDC on the Stellar network, users can send and receive digital assets that are tied to the value of the US dollar, ensuring stability and security for both the sender and the recipient. In conclusion, the remittance industry is undergoing a major transformation, driven by the rise of digital money transfer solutions and the shifting needs of consumers. Factors like inflation, geopolitical instability, and global crises are accelerating the demand for faster, cheaper, and more reliable remittance services. Stellar, with its blockchain-based platform and partnerships with traditional financial institutions, is at the forefront of this change. As the industry continues to evolve, digital remittance solutions will play an increasingly important role in ensuring that people around the world can send and receive money in a way that is fast, affordable, and accessible. One of the most telling signs of a blockchain network's maturity and potential for long-term success is its adoption by major financial institutions. In recent years, we've seen a growing interest in blockchain technology from some of the largest players in the financial sector, and Stellar has emerged as a leading platform in this space. The decision by Franklin Templeton, one of the world's largest asset management firms, to tokenize their assets on Stellar is a clear indicator of the network's credibility, scalability, and security. This move represents not just a validation of Stellar's capabilities, but a significant step forward in the broader institutional adoption of blockchain technology. Franklin Templeton's choice to utilize Stellar for their asset tokenization efforts highlights several critical advantages that Stellar offers over other blockchain platforms. First and foremost is security. In the financial world, security is non-negotiable, especially when dealing with large sums of money and the assets of institutional investors. Stellar's consensus protocol is designed to provide a high level of security without sacrificing speed or efficiency. Unlike proof-of-work systems, which rely on computational power to validate transactions, Stellar uses a federated consensus model that ensures faster transaction finality while maintaining security. This system significantly reduces the risk of malicious attacks, making it an attractive option for financial institutions looking to safeguard their assets. Scalability is another key factor that sets Stellar apart. As financial institutions explore the potential of blockchain, the ability to handle a large number of transactions quickly and efficiently becomes critical. Tokenizing assets involves creating digital representations of real-world financial instruments, such as stocks, bonds, or mutual funds, on the blockchain. These assets can then be traded and transferred just like any other digital token, but they require a platform that can handle the volume of transactions that large institutions demand. Stellar's network has proven itself capable of scaling to meet these needs, with the ability to process thousands of transactions per second at a fraction of the cost of traditional systems. The scalability of Stellar is particularly important in the context of tokenization, where the volume of transactions can quickly grow as more assets are digitized and traded on the platform. In Franklin Templeton's case, the firm initially announced the tokenization of a $270 million money market fund on Stellar in 2023. Just a year later, this number had grown to $380 million, demonstrating the rapid expansion of their digital asset strategy. As more institutions follow suit, the ability to scale will become even more critical, and Stellar's infrastructure is well positioned to handle this growth. Cost-effectiveness is another major factor driving institutional adoption of Stellar. Traditional financial systems are burdened by a multitude of intermediaries, each of which adds cost and complexity to transactions. Whether it's clearinghouses, settlement agents, or custodians, every step in the process requires time and resources. Blockchain technology, and Stellar in particular, simplifies this process by eliminating many of these intermediaries. Transactions on Stellar settle in a matter of seconds, and the fees associated with these transactions are a fraction of what traditional financial institutions are accustomed to paying. For institutions like Franklin Templeton, the cost savings associated with using Stellar are not just theoretical. They translate into real-world benefits for both the company and its investors. By leveraging Stellar's blockchain, Franklin Templeton can reduce operational costs, pass those savings on to investors, and create a more efficient market for their assets. This is one of the primary reasons why we are seeing increased interest in blockchain technology from major financial players. It's not just about embracing a new trend, it's about improving the bottom line. What makes Stellar particularly appealing to institutions is its flexibility. The Stellar network is designed to support a wide range of use cases, from cross-border payments to asset tokenization. This flexibility allows financial institutions to experiment with different applications of blockchain technology, all within the same secure and scalable environment. For example, in addition to tokenizing their money market fund, Franklin Templeton has explored the potential for peer-to-peer transfers on the Stellar network. This capability opens up new possibilities for institutional investors, allowing them to transfer large sums of money directly between parties without the need for a third-party intermediary. The institutional adoption of Stellar is also a signal of the broader trend toward tokenization in the financial sector. As the digital economy continues to grow, we are seeing a shift away from traditional financial instruments and toward digital assets that can be traded and transferred on blockchain networks. This shift is being driven by the efficiency, transparency, and security that blockchain technology offers. For institutions like Franklin Templeton, tokenization is not just an experiment, it is the future of finance. By tokenizing their assets on Stellar, they are positioning themselves to take advantage of this emerging trend and offering their clients access to new and innovative financial products. Another critical element of institutional adoption is regulatory compliance. Financial institutions operate in a highly regulated environment, and any new technology they adopt must meet stringent regulatory requirements. Stellar has worked diligently to ensure that its network is compliant with global regulations, making it a trusted platform for institutions looking to navigate the complex world of financial regulation. This commitment to compliance is one of the reasons why institutions like Franklin Templeton have chosen Stellar over other blockchain platforms. Finally, it's important to recognize that Franklin Templeton is not the only major institution exploring the potential of Stellar. Other financial giants are beginning to follow suit, exploring how Stellar's blockchain can improve their operations and offer new services to their clients. As more institutions recognize the benefits of blockchain technology, we can expect to see a continued increase in institutional adoption of Stellar and other blockchain platforms. In conclusion, the institutional adoption of Stellar, led by firms like Franklin Templeton, is a clear indication that blockchain technology is moving beyond the realm of speculation and into the mainstream of the financial industry. Stellar's security, scalability, and cost-effectiveness make it an ideal platform for asset tokenization and other institutional use cases. As the financial sector continues to evolve, Stellar is well-positioned to play a leading role in the future of finance, providing institutions with the tools they need to succeed in a rapidly changing digital economy.